Hello and welcome to the Trading Zone. I'm Joe Teague, Equity Armor Investments. With me is
Brian Stutland here, Equity Armor Investments, also portfolio manager, and we have a great show today, don't we, Joe?
we have a fantastic show today. Thanks everybody who's joining in live. Thanks everyone who's watching later. It's really great to have you all here. It means a lot to us, and I want to wish a personal, very happy birthday over the weekend to the one and only Brian Stutland. Way to go, buddy!
Yeah, the big 49, 1 year left until it's all downhill and half a century mark. So yeah, I'm feeling a little bit old, Joe, no doubt about it. But hey, money never sleeps, so just got to get back at it and start trading it up today. So what do we got here?
Yeah, 49 is the new 39, is what I hear.
Right.
Well, it's great to have everybody here again. We got a big show. We want to get into it. We got a big inflation metric this week. People say this is the Fed's preferred inflation metric. For me, there's not a lot else going on out there, but any inflation data is going to be hotly anticipated, and this will move the market. So don't sleep on this week. It's going to be a big market moving action later in the week.
Yeah, no doubt that inflation will be very key, but we have a great show. The big story really today is going to be a lot of talk about Apple and NVIDIA. We really want to get into that. We'll get into that a little bit later in the show, but there's really some interesting things that have happened with some major rebalances, literally billions of dollars swinging around the table here between Apple and NVIDIA and rebalances and what that really means for the market, because a lot of that has affected what's happening today, actually, with the big rotation. But before we get into that, obviously, we want to talk about some of the trends, some of the action that's happening right now. What are you seeing about this trend here, Joe?
Yeah, well, I mean, we know that big rotation involves Apple and NVIDIA. NVIDIA is just absolutely getting clobbered today. People are saying, but wait a minute, all the gains are concentrated in NVIDIA. If NVIDIA goes down, the market's going to collapse. Well, that's not at all what happened today. The market's gobbling up those losses, putting that money to work in other places, selling their NVIDIA, buying some other things which are a little bit cheaper. And the trend just continues to be higher here, Brian. We're right in the middle of this upward green trend line here. I think there's no reason, like I keep on saying, for us to adjust our positions until this trend changes. This trend is undeniably bullish, and it continues to drag stocks higher.
Yeah, it really does. And it seems like, the bull market's been on. We've had muted volatility in the treasuries market. We've had muted volatility overall. And sometimes, when that happens, yes, people can use the contrarian side that people are, sleeping too easy on this market. It's a sleepy bull run. But really, all systems are go in terms of valuations, in terms of where interest rates are. And so it seems like this trend is, it's sticking in place and it's moving higher.
Yeah, and speaking of moving higher, we also have the skew trending a little bit higher here, Brian. This is the price of S&P 500 25 delta puts versus 25 delta calls. So these puts are becoming slightly more expensive relative to the calls. So this actually has been a decent sign for volatility trending higher. And when you get volatility as low as it was around that 12 area, yeah, it makes sense that volatility can go higher, even if the market is also going higher. We'll get into that in a little bit. Actually, let's get into that right now, Brian. Looking at the VIX futures curve here. We're right in the middle here. This blue line is us here, Brian. Pretty steep spot where we're at from the front month to the cash. The cash below 14, the front month right in the middle of 14. But I want to kind of just point this out real quickly. Front month is July, Brian. The second month is August. This third month is September. Do you know what the fourth month is?
Well, that would mean it's October, and
the fourth month is
you don't have that on this chart, but I think we should talk about it, right?
Yeah, the fourth month is October, and the VIX is 30 days implied, so that'll be November volatility. October is measuring. Is anything happening in November this year?
Yeah, we have a major event. It's called the election for the United States of America. We'll either have a repeat old president that we once had before, or we'll continue on with another 4 years. But I think
we'll have a current old president, either a repeat old or a current.
Yeah, right. Both old. Oh God. But when you look at it here, the VIX futures are, that October future is above 18 right now, which is remarkable. So we really see this steepening out happening, going all the way out to that election timeframe, people expecting volatility to pick up. And we've seen stats out there. When you look at election years, the VIX tends to be about 20% higher as you move from July of an election year to the actual election time of November. And so the VIX futures are reflecting that. The curve is starting to price a little bit higher up than we saw, a month or 2 months ago. When you look at the skew index, like we saw, we're not seeing as many call buyers now that the market's raised to new highs. So more put buyers coming in with the skew index making higher lows. So all this is shaping up for some, decent sized movement to the market come September, October, and into the election.
Yeah, well, this has been the case. October has been bid all year long, but we're just getting a little bit closer. And we know we talk about volatility coming in waves and there's ripple effects. Well, right now we're getting a lot closer to the center. So these waves are going to get bigger and bigger the closer we get to this election.
Yeah, and I mean, look, we're trading it. I mean, I don't necessarily would be a volatility buyer today. When we look at some of our VIX indicators that we use for trading for clients, it doesn't necessarily say buy volatility exactly today as a day trader, but this is something we're watching as we want to add a hedging to our portfolio. Should we start to see things, momentum start to roll over, and we want to grab and own some of this volatility hedge protection?
Yeah, I mean, one thing we should just point out, though, if you're an advisor, just investor looking at here this volatility and saying, hey, volatility is cheap right now. I know volatility is going to pick up around the election. I should just buy some November puts or some November straddles in the S&P 500. It's already priced in. So it's no free money to be had there on that. So volatility is already high in the election months. We expect it to pick up through there. But again, plenty of time for that to happen. It doesn't mean that volatility is a screaming buy right this very second. Now, last week I was talking about the MOVE Index and oil. Oil is so crucial to inflation. We're looking at oil met the high for 2024 was in March. That was back when people were saying, hey, inflation is too high. Maybe there'll be no rate cuts. Maybe we'll even have a raise before we get a cut. Oil fell back off of that level. And people said, oh, inflation's going down to zero. We're coming back in the middle of that range of the oil. Actually, a big rally recently in oil. So I think this is kind of a critical spot here for oil. Maybe you can kind of, make a case for a triangle wedge here. This is an important spot. It's not really giving me a clue one way or the other, whether or not inflation is a problem or inflation is, completely solved, but it could be a spot where it could break to one side where I could say, hey, trends favor either inflation coming back or going away.
Yeah, I'd be watching really like this more like $90 level in oil. If it were break above there, then I'd start to get concerned about some of the inflation picture. We obviously have a PC number. We talked about that. That's going to come out on Friday. And then the Fed's going to be able to digest that and try and figure out where interest rates are moving from there. If we can actually get 2 rate cuts, but it's more and more looking like maybe 1 rate cut before the end of the year. If I suspect it. So unless oil is sitting here below $70, I think that's when maybe the rate cuts start to kick in. But oil just sitting around here with inflation where it's at, this is sort of like you said, this wedge factor. So nothing really to do in that sense. And I think that's affecting some of the volatility in the treasuries market, right? I mean, we probably have something here on the MOVE Index that you talked about last week, Joe, as it indicates where that could be and what that means for stocks.
Yeah, and it just very closely correlates to this MOVE Index, the oil prices, because it's very closely correlated to inflation. We know the MOVE Index is going to be moving off of either inflation expectations being a problem or growth expectations being a problem. But this is just really critical for me. We're down below 90 here. We're actually 94 today. So this is really important here. We're in this area. This is very good area for stocks. We know those tremendous years to own stocks in this area. So, bottom line is when the MOVE Index is going down, stocks are going higher. So I think that's a good sign in the short term. But Brian, I think we talked about this last week. Let's bring it into the big story this week. We teased it in the open. Let's talk about this rebalance we had going on Friday.
Yeah, I mean, this is tremendous, really. When you look at how ETFs really control this market and the passive ETFs and what they do and to push things around, the S&P technology sector ETF is massive. It's about an $80 billion fund. If you spread that out across other ETFs that kind of track the tech sector, they kind of all follow in trend line with each other. And really what we've seen is there's certain components and requirements that these ETFs have to have. And what happened was we saw this huge rebalance, this reweighting of the index, where Apple went from literally a 20% weighting in the index down to less than 5%. So massive amounts of selling that needed to take place in Apple stock on Friday to sort of get back in line with what its current weighting is, whereas NVIDIA actually added some weighting to it, getting above 5% now, above that 6% level. So really a huge trade. And I think traders were really trying to get ahead of this. Basically, Apple had their big tech conference. They talked about AI, how they're getting involved in that. The stock had a huge pop above $200. But since then, June 12th or 13th, we sort of saw that back off a little bit as this reweighting took place. So this is really affecting the market, not just last week, but now this week. And, right here, I mean, what do you see here, Joe? Do you think people got over exuberant about NVIDIA during this rebalance and now it's coming back into line?
Yeah, well, some fascinating things happen between these two stocks over the past month for sure. NVIDIA, great earnings. NVIDIA had announcement of their split. They ran up to new all-time highs. Apple had that amazing, unveiling. The market bought into. They believe it. There's a reason to get the next version of an iPhone now. There's going to be excitement again around new Apple products. We'll see if that comes to pass. But there is, that's been what the street's been talking about and excited about it. Apple had this awesome run up, and then for no reason at all, Apple kind of went sideways and lower, and NVIDIA kept going higher throughout the week last week until we kind of hit a breaking point. NVIDIA amazingly hit 140 and then backed off, and then Apple only today getting a bounce again.
Yeah, and when NVIDIA's backed off here today, I think that's actually like trickled and ripple effect. I mean, we do a newsletter, right, Joe? We call it the ripple effect because you can't jump in and do a cannonball in the deep end and not expect the waves to reach the kids in the shallow end. So, that cannonball effect is NVIDIA itself. It's such a big weighting now in the S&P. And so when we saw that sort of run up and now back off, other stocks get repurchased and reweighting. I mean, we're seeing large cap value up. We were seeing that up over 1% at one point this morning on simply just a massive rotation. We saw banks being bid up, real estate being bid up this morning, energy stocks for whatever reason, a handful of them, Schlumberger up 3% this morning, really out of nowhere. And really, it seems like this massive rebalancing going on as we head into the end of the quarter. So we've got a big rebalance in the tech sector. We've got end of the quarter rebalancing in general. And I think this is creating quite a bit of rotation in the stock market. And we saw this Apple, NVIDIA sort of play out, and now it's reversing. And I like Apple right now. I think it didn't get the bid that it saw in other stocks. And let's take a look at Google versus Apple, right? I think we have a chart on that.
Yeah.
Well, this is sort of what I'm expecting in Apple, right? It broke down below sort of this 212 level. Now it's back above, but let's look at it versus Google, which also they've been tracking very likewise to each other. Obviously, we heard Google's going to be sharing sort of their AI, regenerative AI programming with Apple on their devices, with Siri. And so those two were trending together. We saw this rebalance that needed to occur in the tech sector. Apple sold off, making this sort of double top. I expect it to run the same pattern as Google. What do you think, Joe?
Yeah, it makes a lot of sense to me to see. I love that Apple's today is retaking this level. I love the pattern that Google had. I think it makes a lot of sense. It trends and back to these all-time highs. Just in general, to see this rotation today, I think is very healthy. It's actually something we've seen a lot this year. We've seen the semiconductors have been leading this rally. The tech companies have been leading this rally. There have been days when NVIDIA and the semiconductors and Apple's have had sell-offs and the rest of the market did well. But then we go back to the risk on trade where, the semiconductors will go back to leading. So this has been going on all year long. I think this is very healthy. This is a sign of low correlation. This is actually a sign of low volatility when you see stocks moving in opposite directions. I think that's a sign of a healthy market. Last week, we were talking about the lack of breadth and how all the gains are coming from one place. I think it's a good sign to see that spread out today. I think that's good for the rally to continue. That's a good signal. And last week, Brian, I put on a trade for Apple. I was saying, boy, I would love to see it pull back. I'd love to load up the truck down here at 205. And I'd love to participate to the upside because I think there's potential for it to escape past these all-time highs and reach new levels. Remember, Nvidia up, even after today's sell-off, still up over 140% on the year. Apple's having a nice year, up 10%, but nowhere near the hype levels that Nvidia has had. I think with the new optimism, the new excitement around their new AI products, I think there's reason to think that the AI hype, the AI excitement will reach Apple. There's reason for me to think that Apple will have a nice rally. I want to continue this trade. Last week, this trade was, I put it on for 2.25. It's right around flat right now, maybe a little bit of a credit to put this on. You could collect money to put this on. It allows you to get into Apple below 205, where I'd want to own it anyway, and we can participate to the upside if it does break above 220.
Yeah, I really like this trade. And I mean, if I hadn't put this on last week, or maybe I did, and I want to sort of average in right now, I think now is the time to do it, because I really do feel like Apple is poised to sort of play some catch up to where Google has moved, stock pricing wise, on a technical basis. It got above this 211.75 level. So I think as long as it stays above there, the trend would push basically to all-time highs here. And so leaving that short put down at 205, yeah, Joe, back up the truck and let me buy this stock at 205. I would love for that to happen. So I'm not too concerned. And that's why I'm willing to sell that put, reduce the cost of an option spread, the call spread that we bought to play to the upside. I would reduce that cost by selling this put. So this is a trade idea I really like. And I think eventually, by the time we get to that July expiration, that this trade plays out as a winner. So I'd be looking to add to this. And this is a way for, portfolio managers to sort of, rebalance in without having to do that. Because obviously if Apple doesn't get down to 205 or below, this trade now trading for a credit, basically you collect money and nothing happens. The options just expire off and it is what it is. So I really like the risk reward situation here on this.
Yeah, and I think it'll move like the market. If we're, as a portfolio manager, we're in the middle of this upward channel here. You looking at this green channel, you basically say, oh, I'd love to buy it on the bottom of the channel, sell it on the upper end of the channel. Now we're in the middle. How do we necessarily trade it? Well, we can do so. We can design this trade. We're going to participate if we do run up and touch that top. I think that's a good possibility. I'd love to buy more if it does trade off down at the bottom of this channel. So I do think that trade lines up exactly with this channel also. And fairly confident that's what we'll witness over the next month.
Yeah, and I think, like we said, if this channel breaks, just to retouch back on this, I know we're talking about the Apple trade here, but just to retouch on this trend channel, if it breaks this channel, that's maybe when some of the volatility regime, I start to get worried, and I'm going to be looking to add protection, add hedges to client portfolios if that channel breaks. But right now, we're in a good spot here. So, Joe, this has been a great show, some really good tips. I mean, obviously, big names like Apple and NVIDIA we've talked about. I have to be watching those for clients, right, Joe? I mean, these things are drivers of the market these days. And the AI play in general has been what's driven the returns to the market this year. So much concentrated in those few names that I need to be watching these and watching some of these levels.
Yeah, and it's exciting to watch, and it's really just exciting to be, a participant in the market in the middle of this AI revolution. So I can't wait to see what happens next.
Yeah. All right, folks. Tune in every Monday, 1 p.m. Eastern time. We're here on Trading Zone. We have a great show, obviously. We break down volatility. We break down some stock picking. We break down what's going on in the market in general. So if you're an investment advisor, an individual, feel free to reach out to us if you have any other questions here or write in on the chat as we talk live during the show. We'd love to hear from you as we try and sort of navigate this election year, which, volatility is coming down the pipeline. So tune in every week. I'm Brian Stutland here, portfolio manager, Equity Armor Investments, with my colleague, Joe Teague, also a portfolio manager at Equity Armor Investments. We'd love to see you every week. Tune in and keep following.
Have a good week.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc., all rights reserved, member FINRA SIPC.